and we can post it later. And we're ready to get started. All right, I can see right now we've got somebody new in the Bentonville office that not everybody's met. I'm going to cast this to our lobby TV here in Fayetteville. And we're going to make sure that everybody gets a chance to say hi to, I don't know if she wants me to say Tatiana or Toddy, which Toddy? Is that preferred?
Go ahead.
I prefer Toddy.
Okay, welcome, Toddy. We're glad to have you with us and have you a part of us. It's flattering. I love new folks joining us. We definitely are flattered that you're here. And I got to hang out with Toddy and have lunch with her. And she is a brilliant human being who's going to be a good addition. We're fortunate. Very driven too, and I believe she'll be an asset to us. She's also going to have a baby, so that's pretty awesome, right? Right? Okay, we'll go ahead and
Yep.
share.
Wow.
All right. Oh, I always do that. Okay. 133 million is the goal this year. And guess what? We're pushing. We're making things work. We've got over 17 under contract collectively between both offices. We've got about the same closed. Actually, I think it's 19 under contract total. Yeah, I saw Felicia's. No, it was 9.9 under contract Fayetteville.
Yeah.
And yeah, and then, but yeah, we are definitely well on our way as a company to hit that goal. So thank you guys, and keep pushing with it. Still being this early in the year and not being towards spring break yet. Well, it is spring break next week, but we haven't hit the busy season. So if you're busy now, get ready. Get ready. I would highly encourage to be a part of the listing portion of the market. We know to get listings, you're going to need to do real estate reviews, provide value, give value, and you will get in return. Get out there and do these things. This was a quote that popped up on the Ninja site that I just absolutely adore. When I focus on productive activities, production takes care of itself. Who remembers the technical terms? It's not very technical. It's true. What you focus on expands. The Ninja technical of that is lead measure versus lag measure. Yep. Pooh. Abby Driver's mad when I'm right. Every time. Lead measure versus lag measure. You can measure your activities. You can measure your activities. You know what you're putting in. You also know what you're not putting in. If you're not having your Monday morning meeting with yourself to go over exactly what's going on in your business, you're doing yourself and your sphere a disservice. You did it. Abby Driver did her Monday meeting. Well done. 2 weeks in a row, yo. So do your Monday morning meeting. If you do the Monday morning meeting with yourself, not only are you going to push yourself harder this week, but you're going to get a glimpse of what you don't know about in running your business. If you don't know about it, if you use that sheet and pull that up and say, yeah, I know I didn't do that last week, but the reason I didn't do it is because I don't know how. Then now we've got something to talk about. Now we've got some coaching that can happen and some creation that can happen in your business. Without that, you don't know what to ask. Also, I'm still running into a lot of agents waiting to know more before they do. If you're waiting to know more, you'll never get there. It just won't happen. It takes courage. It's scary. I get it. But if you don't step out to create, it will never happen. What I can do, what the other brokers can do, what our community and message thread on Facebook can do is answer every question you have and guide you through that process. What we cannot do is create the relationships that you have, that you can nurture and turn into transactions. If you're not out there Ford calling, if you're not out there doing real estate reviews, if you're not sending postcards and newsletters, if you're not doing the actual work to stay in flow with your sphere, it doesn't matter that you will ever know. You cannot prepare enough to get your business going. If that were the case 18 years later, I would still be handicapped instead of being a top producer. I wouldn't be doing it. I wouldn't be doing it. You cannot wait to know more. Get out there, get with your people, foster those relationships, make them understand that you're in real estate, provide value, give them a real estate review, help them. Without that, guys, I'll just tell you, those are the productive activities. When you do that and they say, I want to list my house, we can help you. When you do that and they say, I want to buy a house, we can help you. We cannot create those relationships for you. It's just not what we can do, or any other office for that matter. Make sense? So here are the things. Daily, you wake up with gratitude, because if you don't, your vibe won't attract. Anybody ever met with somebody in business that was mean, that they didn't like? If you used them out of complete necessity, not want. Then you did not refer them. Matter of fact, you probably talked smack about them. Wake up, say your gratitudes, do your affirmations, get your mindset right, then show up. If you have a space that you prefer to work at, go to that space so you can do these things. If you do that on purpose, then it will happen. If you don't, it won't. Write 2 personal notes. Focus on your hot list. Focus on your warm list. What's a hot list? People that have given you permission to talk about real estate with them. They have started the conversation and said, real estate. Who's on your warm list? Life changes. We've recognized the life change through our Ford calls. What's a life change? What's an example of a life change? Pain or pleasure. And what are those?
Job promotion.
Job promotion. New baby. Huh? Death in the family. Could be pain or pleasure. Never mind. That's bad. That's bad. Retirement. Focus on your hot list. Those are the people that are actively looking. When you look at your hot list, the question you should ask yourself is, if I do the right things today, who would buy a house? Who would sell today if I do the right things? On your warm list, I like this. This is new. You ready? It's called a warm list because you need to be warm. You need to be caring. Something's changed in their life and you need to care about it. You need to be present, be warm with them. It's not that they're warm, it's that it's your turn to be warm with them. If it's pain, they need a friend. If it's pleasure, they need to be celebrated. Be there, be present. Weekly, make your customer service calls. These are folks that are under contract or are listed. And you've got to call them every week to update them so that you're not absent in their lives. Just because they're under contract doesn't mean you're done. Schedule 2 real estate reviews every week. Have 50 live interviews. Live interviews means voice to voice or face to face. Voice to voice or face to face. So if you're making 5 Ford calls a day, you're halfway there in a week, and you'll run into 25 people in the community and they call you too. Those count. Those count. Then update your database. Your database is a living creature. It's alive. You take people off, you put people on all the time. You add information all the time. Where do I start with that? Names and phone numbers, addresses. That's it. If you dive too deep at first, you'll get overwhelmed and you'll get so busy with the doing, the creating, that you'll never do. You'll spend so much time creating that database that you'll never do anything with it. Best story I have about that is a fella that had every name and email and phone number and address of every university employee. Spent every day at his desk entering the data. Never did anything with it. Kept telling me what a superstar he was going to be and how he was gonna just blow the lid off with all of these people and he'll be the university's top realtor. I bet he probably got to like 300 before he was like, this just isn't anything. Enter 5 and then work those 5. That's your week. Enter 5, work those 5, catch up with them, be their friend, be in flow with them. Next week, add another 5. It doesn't take all of it at once. If you want to do all of it at once, you'll be poor. You won't get there. You've got to get in flow with these people. So those are the things. Those are the things. When I focus on productive activities, production takes care of itself. Those are the things. Those are the things. We've got First Colony Mortgage with us today. And this is Eric's favorite people on earth. I know. Second. I know that they salvaged a horrendous transaction for Eric, and he's been on board with them ever since. It was a bad time. And they pulled him out of the muck and mire and raised him up and made him a hero. So if you want to talk about them any before they start, yeah, great. Come on up.
Hey, everybody. So just real quick, we have lenders in here all the time, and these are obviously lenders as well. Everybody can get a mortgage signed up for somebody. And the reason I love these guys so much is A, they're just terrific people. And B, they focus on the business exactly like we do with Ninja. It's all about relationships. Like they don't, once they close, it's not like, okay, that's done with that, throw the file in the basket, they're done. And they call people afterwards, make sure everything's going all right. They're concerned if something didn't go right. They'll work till 2 o'clock in the morning. Just phenomenal people. I really can't talk highly enough about them. They become really good friends too. Then hand this over to them.
Yes, thank you. I'm just gonna put this down here, I think.
Web page for you.
Oh,
Yeah.
thank you.
There we go.
Thank you.
Yes,
I'm just going to, I'll do that after I'm done. I want to take just a minute to introduce myself. First Colony Mortgage, 1984, originally out of Utah, which is where we're from. Quick story, how I got to Arkansas, because people always ask, how did you get to Arkansas? Started in California, moved to Utah, now in Arkansas. My son-in-law got an offer to the U of A to go to school. And I sat my daughter down in a private conversation and said, honey, you can't move to Arkansas. You can't. She said, Mom, why? You know, Max has got this great offer. And I said, I really think that everybody in Arkansas has a couch on their porch and an outhouse in their backyard. I don't think that like you can really move ahead and prosper there. Well, I've been proved wrong in the last 4 years that she's been here. So I've been grateful to be here. People definitely have couches on their porch in Gentry, and they have outhouses in their backyard in Gentry because I've seen them. So I was not entirely wrong as a mom, but I definitely was wrong about the real estate market here. I wanted to start out a little bit about the most important thing that's happening in the market right now, and it's actually happening tomorrow. So can we talk about inflation for just a second? Because what I'd like to do is try to provide value, as your broker just mentioned to you. Jason talked about how you can be different. What value are you going to provide to these clients and these people that's different than everybody else? And I'm hoping to fill that gap a little bit with Jason's great introduction. So tomorrow, for the first time in 3 years, the Fed is meeting, and the recommendation by the Fed is to increase interest rates by a full 0.5%. That's the recommendation by the Fed. I don't know anybody here in Carter's administration, 77 to 81, anybody? Okay. When Carter was in administration, inflation was an all-time high. Today, it's higher than it was then, today. So, and we're talking about interest rates for borrowing money at 18%, 16 to 18% to borrow money, and our inflation rate's higher today. In January of this year, mortgage rates were 2.65%. Today, any guesses?
4.5.
Yeah. So the average is 4, right? Because they're averaging in 15 years and they're averaging in short terms and balloons and things like that. But when I opened pricing this morning, an 800 credit score, 20% down, 30-year fixed rate mortgage was at 4.5%. So what does that do to somebody's buying power? Because what else is going up? House prices, right? So now I have house prices going up and I have interest rates going up. How does a realtor advise a client to buy and sell in this market? It's difficult, but we do have these life events and we do have value to add to their lives. So back to inflation a little bit more. When the market announced this, when the Fed announced this, the market took the change on rates. So even though the announcement is tomorrow, we've already adjusted for that. Kind of funny thing about interest rates, right? We're going to take a guess at what they're going to say tomorrow. We're going to try to cut our losses. So the rate went up yesterday. If anybody had clients yesterday that sat on the rate over the weekend and thought, oh, I'm just going to let that float, right? Big mistake. We were locking rates on Friday at 3.75, 3.875. Today, 1 weekend later, 4.5%. So anyway, when that announcement comes out, we will see several more announcements like that this year. The Fed's announced up to 4 more announcements increasing rates. The Fed chairman said he would support a 0.25% increase tomorrow. So we are going to see the 0.25% increase tomorrow up to 0.5%. All right. So I did a little research on the inflation costs of homes in Fayetteville and Benton County. Anybody, any guesses on what's happened? Let's just say from January to February. And let's start with Fayetteville because that's where we're sitting right now. So the median listing price in Fayetteville, any guesses? $387,500. $387,500 for a house here in Fayetteville. The median square foot, $185 a square foot. So that is a 23% increase in your house prices in 1 year. 23%. So we have a lot of people sitting, waiting, right? A lot of locals. So coming from out of state, we love this market. In Utah, the median listing price is $550,000. $550,000. So when we get here, when out-of-staters get here, are we afraid of 387.5? We're loving it. We're investing. We're buying as fast as we can because we're coming in from markets like Idaho and Utah, Montana, and even South Carolina, Florida. All of these markets can really afford housing here in Utah. So good campaign, or here in Arkansas, so good campaigns for out of state are very successful. In Bentonville, you've got it even worse. So median listing price in Bentonville is $449. $449. Still price per square foot about the same, $185. But you guys are up against a 32.9% increase year over year in the cost of homes. So again, we need listings, right? We need people that want to list their homes. But in order for them to list, what do they have to do? Buy. And one thing I've noticed about this area, construction is getting there, but it's not there yet, right? So you don't have builders coming in and building these massive complexes of duplexes and triplexes and single families and I call them row homes, townhomes, condos, like that. So you've got to get the existing person to sell. Let's talk about that a little bit, if that's okay. First Colony does things a little bit different. We do a relationship-based ninja style training. Everybody has a center circle, if you will, and that center circle is what drives you to do the things that you do. And you can see it when you talk to people, right? Sometimes you're talking to somebody, you can instantly tell, like, that guy's center circle is money. Everything that he talks about revolves around money and how money makes the world work and how money drives him to be successful. Some people's center circle is self. And when you're talking to them again, you sense this self, like everything that's going on in their lives revolves around them. This ninja training that Jason's talking about and that we do, when that center circle is genuinely the relationships that you have with other people, the byproducts become money. They become more successful. They become humanitarian. All of these things come out of this center circle as relationship. I think that's why Jason's driving home this point to you guys of why this relationship-based sale is so important. When you're meeting with a client and you can genuinely talk about their needs, this home feels a little bit small for you. This school district doesn't seem to be right for you and your kids. This new relationship that you're in might be a great start for you in a new home. Not because it means a commission to you, but it means a better life for the client you're meeting with. People genuinely relate to those conversations. And we have a lot of those people living in homes that they've outgrown in Fayetteville, Bentonville, Springdale. And they're just holding on saying, if I just wait a month longer, if I just wait a little bit longer, that rate's going to drop and that price is going to drop. And they're probably not correct. And we all know that those rates are still going up. So anyway, that turn to relationship lending is important. What we do at First Colony is to try to drive that relationship. So first of all, when your clients, this is something that I haven't introduced in Utah. It's a little bit new to Eric as well, or Arkansas. We've done it in Utah for 30 years. We've just introduced it into the Arkansas market and it's wonderful. When your clients go under contract, the buyer, the seller, the buyer's agent, and the seller's agent is going to get a box of crumble cookies. It seems small, but it's a time to celebrate. You are under contract. And I don't know about all of you, but when you guys go under contract, we celebrate in the office because you're writing 15, 16 offers sometimes to get one guy under contract. And then now the work begins, right? You thought you just did the work to get them under contract. Now you've got to get an appraisal. You got to get an inspection. You've got to deal with everything that comes after getting them under contract. What we found that these cookies do is they unify that group of people working together. Little box of cookies, the agent gets a cookie, the other agent gets a cookie. All of a sudden, hey, congratulations, your client's under contract. We're looking forward to working with you. Eric O'Brien, Stephanie Bavard. All of a sudden, Eric's just sent a cookie to a listing agent. What? They're talking, right? They're talking. As problems get a little bit harder to deal with over the process of the loan, Eric and this other listing agent have a communication. They have a way that's brought them together at the beginning of the transaction. Seller and buyer become a little bit more cordial over cookies. They become a little bit more cordial when things come up. Hey, that repair needs to be done in the house. Oh, subconsciously, that was so nice of them to send us cookies. We're going to give a little bit on this. It really works to bring that transaction together. When they're approved, they get a little DoorDash coupon, not much, but hey, sit back, relax, your loan's been approved. This only goes to your buyer. We want you to have lunch on us. Just relax, the process working well. Then at closing, we give them something from, again, the agent. Everything comes from the agent and the lender saying, congratulations on your new home. We usually do like a ring system or a nest, so just something for their home that they can enjoy, again, from both of us. It's called an experience. It's meant for the client to have an experience while buying their house, things to look forward to, negotiation points, a little bit softer attitude between agents and clients. that has been remarkably successful in Utah, and we have already seen the fruits of it here. And so that is something that we've started here. We hope that you utilize that. Ask us about it. Tell your other lenders about it, please. If you can get this kind of service from somebody that you've used, the whole client experience cost me maybe $200. And if your other lenders want to do it, more power to this market. Okay, so please introduce the ideas. We then do one other thing that's a little bit unique, and I wanted to see if I can figure this out. I hope this is right. This is one of those programs that I have in my computer that just comes up when I ask it to. So I'm gonna see if I can pull this off. Yeah, you're gonna want this password. This is, I know you guys have a lot of marketing programs. Here comes the tricky one. If I remember it. I'm old. Okay, there you go. Can I do it? Oh. Oh, you gotta do the physical click, not the touch. Okay. Sorry, man, I'm not gonna say the password, even though I really like you, Jason. Okay, let's talk a little bit about HomeBot. HomeBot is a lender program that allows us to send you guys referrals. One of the best lender programs. I hope Eric can attest, you've gotten a few referrals from us. So a lot of it comes out of HomeBot. The advantage to being a lender over a real estate agent is information. You guys collect a lot of information, but what you collect is child's play compared to what we collect, right? We have names, addresses for the last 5 years, social security numbers, landlords, birth dates, divorces. There's not a bit of personal information I don't think a lender collects. And it all gets stored in a computer, which by law, we can't get rid of for 7 years. So, and a lot of that information is protected. Don't get me wrong. I'm not going to call you up and give you a borrowed social security number, but I can tell you their moving patterns, how often they've moved, how often they've changed jobs, and lifestyles. Did they just get married? Are they joining families together in the future? There's a lot of information that provides whether a client is moving in a year, 2 years, 3 years, that kind of stuff. So today, this is just my last 30-day performance, and we have been busy. So I have to apologize. These numbers are actually a little bit low, but what I want you to pay attention to is this: how many sends went and how many home open went. So 74% of the emails that I sent were opened. Malia, how's that for marketing? Yeah, from a marketing standpoint, usually if you can get 1 out of 100 looked at, you're excited, right? You're sending mailers and you're hoping that 1 out of the 350 responded. 74% of the people I sent this to opened their email. 274 of those viewed new homes on the MLS. 274 people opened the NMLS listings and started shopping for homes. It then tells me who's shopping. Casey Lighton shopping, Allison Cox is shopping, Amanda Huber shopping, Jenny Cather shopping, Patrick, Tracy. There are 13 pages of shoppers from the last 30-day performance. Malia, your mouth's gonna dry out. From the last 30-day performance. So what HomeBot's giving them is a reason to reach out, right? This is the marketing genius of this program. Normally, we have to do all the legwork. That's what Jason's saying. You got to call, you've got to be in front of people. You have to have 50 interviews. Most of you sitting out there should have been like, Jason, you've lost your mind. How am I going to do 50 interviews, right? How am I going to get in front of 50 people? HomeBot gets you in front of 50 people. These kind of marketing programs are valuable. So one thing that I've just added out here in Arkansas is buyers. So homeowners actually own a home. The value to me in this is listing and sell. This is a 2-part transaction for agents. When a homeowner starts shopping for a home, you've picked up 2 transactions. Okay, so I focus on this, and you can see that I focus on this. Buyers, these are people that don't own a home. These are first-time home buyers, people that are looking to get into their first home, that have actually input their own information on their own time in the last 30 days because they're interested in the market. Okay, so as we look on this, I can actually see each home that Allison looked at. I can see the listing that Allison looked at. So now I know the area she wants to be in, the purchase price that she's interested. And HomeBot has all of the information on the house that Allison owns. So, and this is, sorry, it's a little bit slower. I'm not good at computer. HomeBot captured the year she bought it, the interest rate she has on it, how much equity she has on it. I'm just picking on Allison. I think she is a Utah client. This is full of both states, full of Florida as well. So here is Allison Cox's information, and we're just going to take a look at this for example only. Allison lives at Eagle Nest Drive. Her house current AVM value is $975,000. I'm going to stop at this right here. A lot of people say, you know, how do you get the home values? How do you know what a house is worth? HomeBot is generally wrong. Usually HomeBot is sending a notification to the buyer, giving them the completely incorrect value of the house. Why do I like that? Why do I want HomeBot to be wrong on the value? Yeah. Absolutely. Do I get a better call my week than Allison calling me saying, Steph, you've been in this business 30 years, but your HomeBot sucks. It sent out a value at $975,000 and I know I could sell my house for 1.1 million. Allison, I totally agree. How do you know that? Well, the neighbors are all selling for that. Let me have Eric give you a call and do a complete CMA for you, right? Oh, I'm not really interested in selling. I know, but let's get the value of your house correctly. It connects agents and buyers all day long. Then when Eric gets in front of them or another agent gets in front of them, all of a sudden, wow, you've got 2 kids per bedroom. You're not in a school district you really like, because out of the relationship and the conversation, you've learned that Allison wants to sell desperately, but David's afraid, right? The wife always wants to sell and move. The husband's always afraid of the income. So if you can get in front of that wife, you might have a listing 3 months from now, 6 months from now. You might have the perfect listing for her to move into. We see house trading going on, anything to get houses under contract. So we love that. In addition to that, sorry, I'm not used to the physical click. In addition to that, over here, I have all her lending information. She got a loan in April 2020. She owes $396,000 on her $1 million home. Allison, you're 52 years old. How would you like to downgrade and own your house free and clear? Let's sell your house. Your kids moved out. Let's get you to house free and clear, right? You've been in the house 2 of the last 5 years. There's no capital gains. There's nothing stopping you. You're removing obstacles from her thought process. I can't tell you how many people out there think they have to pay capital gains on their owner occupied home. So they don't sell. They don't want to move forward. Great knowledge to have. I know her loan balance. I know if she has a second mortgage on there. She also knows what's happened to the value of her home. Do you see this little chart? She sees how it's grown over the last little while, that her zip code is in demand. So houses are selling quickly. She knows how much principal versus interest she's paid off. She knows what a 15-year or ARM could do for her. She can put any number in here. Yes, sir.
Sorry.
Yeah.
That's money for you guys. That's cool. There are still people out there that bought their home in 2007 thinking 6.5% was a great rate.
Yes.
And guess what? It was. It was a great rate. And if you save them this money in a refi, they will sing your praises and you won't get their transaction. You'll get all of their friends' transactions. That's money.
Let's talk about that 5-year ARM too. You put someone in a 5-year ARM, what are they doing in 5 years, 4 years, 3 years? They're moving. They're usually telling you, you know what, Eric, I only want to be here another 3 years. Great. Let's put you in a 3-year ARM. Let's save you a ton of money. Let's boost your equity, right?
Those figures include an estimate on their closing costs for that.
Sure does. Sure does. Yep. Let's see what you can do with your money, right? You can create an emergency fund. You can make home improvements. You can get more livable space. You can pay down student loans. This is all coming to them of what they can do with their equity. You can buy an investment property and offset the high cost of living with rent. So now you're getting monthly income from your investment and you're getting retirement income from the growth of your property. HomeBot has been instrumental in taking people who only believe they can ever own one home to owning two, to owning three, to owning four. So this allows, what could you do with Airbnb? You could get $1,000 a month if you finish off your basement and Airbnb the basement. So I'd love to spend more time on it. I could spend a whole nother session. I'd be happy to come back and train a little bit more on HomeBot. It's 31 years I've done this. I've had a lot of programs. This is the most comprehensive, user-friendly for a buyer or seller to gather information on their own. Because what's happening? Yeah.
Is there a button you can push to turn that into a PDF?
Is there? Does anybody know computers? I wish I knew your
Well, I
computer. I
think
probably can figure it out.
There isn't a specific button for this. These typically go out in emails to each client. On
So what
Yeah,
you can do, I'll send
that's-
you a HomeBot invite.
Okay.
You fill it out and you guys will have access to it. Does that sound okay? Or I can do it from Malia too. Like either one of you, you just enter your home information. You can start, and any of you that want to, I could set all of you up on it. This is not a sales gimmick. I'm not calling you from this. You, the clients are calling me. Does that make sense? They're getting information and they're calling me. So this is not a reach out sales type gimmick. It's an information type system so the clients know where they're at.
So when I was talking about real estate reviews before, that's what we do.
Oh, okay.
And we're talking about the equity in their home, how they can use it. We're talking about their interest rate. We're talking about their value versus how much they're insured for.
Great.
We're walking through the house, making sure that there aren't any needed repairs or updates. And if you wanted to sell, this would have to happen. So you might as well get it done now instead of later.
Love it.
Because more will go wrong between now and then.
Right.
If this could, the thing that would be wonderful, like I love how automated this is because the whole thing, as you said, is to create conversation, not accuracy at this point.
Right.
But there are people that want to hold it in their hand.
Yeah.
And do you have a real estate review handy still? Rebecca can get it, yeah. Our real estate reviews they're pretty and you can hold them. And,
They love
yeah,
tangible.
and people like that. So if this could come out in their hand, that would just be really stellar and it would help our agents create real estate reviews at the push of a button.
I know the client can print it and can hold it. I just don't, I've never attempted on my side
There you
because
go.
I'm always automated, but the client definitely can. The neat thing is the client can tune their own value. The client can get on and say, hey, I really don't think my house is worth $975. I think it's worth more. Phenomenal. What happens when they do that and hit center? What do you think happens?
It tells you.
It told me. The client thinks their home is worth 1.1 million.
Mhm.
Great. I'm going to reach out. How you doing, Allison? I see that you tuned HomeBot. Do you think it's worth, is that just as high as the system would let it go? Do you think it's worth a little bit more? I actually just had a client sell in your area for 1.1. Oh yeah, the system wouldn't let me do any more than that. But they're on it, they're working it, they're adding their second mortgages, they're adding past houses because they're curious to see how it worked. The client is constantly interacting in this. And as I told you, 3 out of 4 of them are interacting in it. So of course you're gonna get people like, hey, this doesn't make sense. I don't want to spend the time on it. But a 75% return rate on your leads is good. And these are all warm leads, if not hot leads, because these are all people you've worked with. Do we have any new agents like within the last year or two? Okay, so these old guys don't do open houses anymore, right? They're tired. They don't do open houses. You guys have to go do their open houses. I know. Like, the big guy does a listing and says, hey, little guy, you want to go do the open house. Let me tell you about the open house. HomeBot captures everybody that walks into the home. So you do a little fishbowl thing. We call it a fishbowl. We're old, right? They give the information and you do a drawing for, whatever you do. You capture that information in HomeBot under buyers, and HomeBot starts sending them relevant information to the price, to the area, to the house, the school districts, everything that's relevant to that search. with your information attached to every single email, every single listing, every single house that goes out. So that buyer section on there is specifically for you to capture leads from buyers. And it rotates them and it keeps them in the system. And remember, again, the system prompts them to call you. This is almost like a little bit where you can do all of your other marketing, but the system is constantly reaching out with relevant personal information to each one of the clients. Again, I could talk all day long on that. So HomeBot is a lender program. I'll tell you about it right now. And again, introduce it to your lenders. I am not here to hold this information for First Colony. This kind of stuff makes our real estate market a better place. If you've got a great lender that you love and you want to work with them, have them call me. I will tell them about HomeBot. I will show them how to use it. We're a law of abundance type of group. I think, how many transactions did you guys do last year in Arkansas? The number was huge in Northwest Arkansas, right? I can't remember in the state, but my team did 300. We're thrilled with 300. We love every bit of the 300 that we did. We're not trying to capture your market share. If I have your clients using HomeBot, your agents using the client experience, when I come across them, my experience from my buyer is even better. So please don't hesitate to use me as a resource, not just lending. We would love to work with you, but we also just want to spread the wealth. So the client experience along with HomeBot is how to create the value for your clients. It's also how to get your 50 people to talk to. You're constantly just inputting names in here and they're rolling back to you when they're ready. Any questions? I did a lot of talking. I need a drink. No? Eric, no questions?
How are you guys also just gorgeous? I don't understand.
It's the magic in the matching sweatshirts. Yeah.
Explain the cost of
Yes. So it costs me an arm and a leg. I'm not even gonna tell you how much it costs me, but it costs you $25 a month to stay compliant. I would love to pay that for you. I can't tell you how insignificant that $25 a month is to me, but I cannot do it. It's a way for you to stay compliant and for me to stay compliant with NMLS. So you don't pay it as a buyer. If you want to come on and you want to look at it as a buyer and you want to be like in the system as a buyer, you can do it all day long for free. Okay, so all of your people free, everybody you sign up free. For you to have the agent end of this available to you, it's $25 a month. Yeah, and again, I can't get around compliance on that. So $300 a year. All right. I've talked a long time. I'd love to come back and do more training, but yeah, that's the value add from First Colony.
Awesome.
Yeah,
Thank you, guys.
you bet.
Thank you for being here.
You bet.
Do you want to talk any about loan products, things that you have that
Sure.
other people don't?
Yeah. I'd be happy to. The ADFA just raised their second mortgage amount to $15,000. We have loved ADFA. Right now, people want to hold on to cash. So even my buyers with $15,000 to $20,000 in their pocket will ask me about no money down. They love that they can get into a house and keep $15,000 in the pocket. So whenever you have a chance to talk to a client about getting into a house with no money down, please do. There's a lot of programs. There's other grants we can work into. There's Walton grants, a little bit more tricky, but we're very versed on grants to help people get free money when they need it. Fannie Freddie loan limit 647.2. There is this new trend. I'll talk really briefly about mortgage companies giving your buyers cash to buy a home and get the loan after they close. Have we heard about this yet? Or is this too new?
Say that again.
Okay, so your client comes and applies with me. I give them a pre-approval letter, but as soon as they find a house, I give them cash to buy the house. So you can actually make a cash offer and they get the loan when they're done. So if you haven't heard about this, try to repeat that again, Eric. Look at Eric's face. It turns any buyer that you have into a cash buyer. Okay, this is new. This is non-traditional. This is non-QM.
That is terrible.
It is, and it is expensive. So I introduced it because you will start to see it. You will start to hear about it. It reminds me of the old negative AM loans. You're around with old negative AM loans, right? The market is going to be coming out with very creative ways to get your buyer into houses that is different than everybody else. I would be very cautious of these ways. I will tell you that the loan is doable. It's a very risky. It's very complicated and expensive. They are perfecting it. So I'll talk about it a little bit more. And if you hear about it, please call me and I'll give you more information on it. But for the perfect buyer, just like a reverse mortgage, it's a good thing. It's just not the right thing for everybody. Don't bring me a first-time home buyer with no money down that wants to do a cash offer, right? I've got to have the doctor that's relocating, coming in, has the money, and needs to make a cash offer for $750,000 to $1 million, something along that line, right? So
Tell us about qualifiers for that.
it is just like you're qualifying for a QM loan. Does everyone know what QM is? Okay, so QM is qualified mortgage. That's what makes lending so simple right now. Fannie and Freddie came out after the crash in 2009, 2010, that area. And they put together this automated underwriting. Y'all heard about DULP. Hopefully you've heard those terms. That's automated underwriting. The purpose of that was to make every loan look the same. So now I can pull together $1 million, billion, whatever money I have that all are about the same FICO score, about the same loan to value ratio, and I can sell them in bulk to the secondary market. And then people invest in that bulk, which is what makes it a valuable commodity, okay? But why we invest in it is because everyone has a high credit score. They have a good loan to value ratio. They have no judgments. So they fit this QM. If
Are
it
we
falls,
talking a 780? Are we talking a 680?
no, we can get down to a 680. So FHA is even QM. FHA, so you guys know, doesn't have a FICO score limit. So any of your lenders out there telling you that there's a minimum FICO score is not selling their loans directly to FHA. 520, 530, 550, all acceptable to FHA. What happens is you're probably using a bank, and if you are, bless you, but banks have a cap on the risk they're willing to take. So they take Fannie, Freddie, and FHA, and they say, oh God, that 620 on conventional is too risky. That 600 is too risky. So we're going to overlay the bank, Arvest, and anyone else is going to overlay that and say, we'll do Fannie, Freddie, FHA, but we're going to cap your FICO score. And all of a sudden you have all these buyers that don't work, not because your lender isn't extraordinary, but because the bank isn't coming up to risk. So product, please, I didn't get into this because I was taking all your time. Please don't turn a client away for credit. Every single day, we take a client from a 520 to a 580. On a credit report, I can't pull the credit report up here. On a credit report, a lender gets a current credit score and they get a potential credit score. We get both scores. So right now your current credit score is 520, 530, 540, but potentially in 30 days or 60 days, your credit score is 620, 630, 640. And out of that comes a program called Credit Expert, which Brandon is by far the expert on this. Yeah, Eric can attest to that.
I don't know how many of my clients in the last 6 months, they've qualified, pre-qualified them, and then by the time we got to the closing, they could get a better product because they raised their credit score with it. Like
Through the
coaching,
process, absolutely.
coach them to pay off this one, move this over there, and it's just amazing.
And it's simple. We see people with a 525 FICO score that have a credit card at Arvest with a $500 limit and they owe $490 on it. And they pay that card down to a $10 balance and they have a 650, 660 FICO score for $400 out of their pocket. You just went from turning a client down with no good credit. We put every single one of those people in HomeBot. We tell every single one of those people how long it takes them to go to 620, 630, 650, and they all are attached to your name as the agent. Every one of them is attached to your name as the agent that referred it in. So please never again turn down a client and talk to your lender about it. That credit score is there. The program's called Credit Expert, and it will give the client an exact to-do list of what they need to pay down and the algorithm they need to follow to get the highest rate. And they do it in increments. So Brandon can find you a 520 to 580, just enough to get him in. He can get you a 580 to a 620, just enough to get you, is ADFA 640?
640.
So, I mean, sometimes we're just, let's get you to 640 just to get you ADFA, right? Or If I've got to get you to 700 or 750 for that specialized program to make a cash offer or do something like that, that's available too. Okay?
Yeah.
Yes,
This is of course no cost to the client. Only cost is to buy down that or pay down that credit card or judgment, whatever that is.
we
To
do not,
this
yeah, thank
restore
you.
To First Colony is not a charge.
Yeah.
Tell me about the cost associated with that cash offer. You said it was expensive, and I imagine so. Is it expensive in the rate or in closing fees?
It's gonna be closing fees. Yeah, because they're not expecting to hold the money long. So you remember the old hard money?
Yeah.
You're gonna kind of follow a hard money type thought process on this because the lender's thinking, hey, if I execute this at 70% loan to value and I made 10,000 bucks up front, if they default, I'll take it back all day long in this market, right? So there's little risk. But if they execute up front knowing they're gonna be paid off with just a couple $1,000s, the profit margin's not there.
So they're looking at a 30% down?
I've seen less, but definitely 20. So mortgage insurance kicks in above 20. So normally there's no specialty products that won't hold on to mortgage insurance. yeah.
So.
So at least 20, but 30 is, I see it come through a lot more.
Okay.
Yeah.
So 20 to 30 down.
And we're
then-
keeping that money, right? You're gonna hand that money to us. We're gonna fund the difference of that money out. You're gonna pay cash, and then I'm gonna execute the loan afterwards.
And then the closing costs, there are like points associated and things like that.
Percentage of loan amount,
Okay,
correct.
percentage of loan, do you know what that is?
You're still going through-
typically?
Well, your hires are going to be a little bit less.
Sure.
So, I mean, you get up into the $1 million price range, but they're still probably paying $18,000 to $20,000 to do it.
Uh-huh.
But in an equity driven market, if the agent can really say, hey, there's $50,000 worth of equity in this property. So instead of bidding that house up, right? That's all you're doing, right? You're bidding that house up and up and up to $50,000, $60,000 over. If you can execute a cash offer, maybe you don't have to go that high.
Are there minimum purchase prices on that?
I haven't asked that question. I haven't, but it has to be single family, no investments, has to be owner occupied, no mobile homes, no couches on the porch. Kidding.
High credit score, low debt to income. They need to have 20 to 30% up front, and then you'll hand them a big old fat wad of cash.
Yep.
And it'll
The
cost
title
them.
company, yeah, but it'll cost them.
It'll cost
I
them.
love his simplicity. I love it. I'd be happy to spend some personal
I
time
don't
with
need
you
to
on
be
that.
the
Yeah,
expert.
yeah. You
I
just
don't
need
need
the
to be
simplicity,
expert,
yeah.
Okay.
But definitely ask your lenders about that too, because it is a approved cash type offer. It is non-QM, so you have to have a portfolio type lender, and your lender has to deliver directly to Fannie Freddie. So there can't be a broker situation, a middleman. It has to be a direct delivery. Okay, so I don't know what you're using now, but that direct delivery. Okay.
And who are you selling the loans to mostly?
So Fannie Freddie direct,
Yeah.
we're selling them to, but the servicing usually will go to like SMS or, somebody along that line. We really, yeah, there's some big no-nos, Bank of America, Wells Fargo. Yes, we don't sell to them.
Yeah.
If I do sell to somebody like, I can't even think of somebody off the bat. Let's say I sold to somebody like US Bank, it would be because they are buying really low FICOs at a really high price.
Mm.
So it's
Not
very,
really
it's not
low.
exactly, and I'm gonna pull together something in the 620 conventional FICO score range, and the clients get a good price, the bond gets a good price, and it's sellable, but it's not common. We bulk delivery instead of individual delivery. So once in a while, sometimes I'll call you and say, you can lock for the next 72 hours at a half off cost,
Mhm.
because that bulk delivery needs to be filled to Freddie Mac specifically. So that's the only time.
So for those of you that aren't familiar, loans are sold in bundles, and these bundles each have different risks.
Yes.
And different investors buy these bundles at different risks. Of course, the highest risk can be the highest profit. And it probably has the most loans in it because they're all low with high interest rate. And there's, $1 million in this bundle versus 10 in this bundle.
Right.
So that's why lenders have their rules. Like, we won't loan under this because we want to be able to sell to investors. So that's part of what she was talking about earlier with those limits.
The difference of that is if you're using a broker, just quick education, so brokers are people that sell one-off. So what if you're hearing from your lender, hey, I'm waiting to hear from underwriting, or they're picking an individual person, so they're underwriting to specific guidelines. Brokers are selling one-off. Who's a broker around here?
Purple Mortgage.
Okay, yeah. So I've never even heard of them. I heard of Purple Mattress. There's Purple Mortgage. Okay, I didn't mean to make fun of everyone. I love them. I love all people. Okay, so you would go into Purple Mortgage, and Purple Mortgage loan officer would look at a bunch of companies like mine. Oh, where's First Colony price today? Where's US Bank price today? Where's Bank of America price today? And they would find the best price. And then they would send your loan or your client to that specific person. So you end up underwriting to that bank's guidelines. Whereas for us, we send it to the underwriter next door, and she underwrites it to Fannie Freddie standards. So there's no overlays based on that risk. It's just like Jason just said, oh, Steph, I hate when you send me these 525 FICO scores. We're going to put that over here in FHA's pool, and we're going to hold on to it. We're going to service it until that pool is big enough to sell off. And they're placing them in pools for risk and then giving a bulk delivery. Thank you. Yep.
Yeah, absolutely.
Yeah.
Okay.
All right. Thank you very much for your time.
Appreciate
Yeah.
it. Great presentation.
We'll finish our meeting.
We're almost done,
Okay.
really close. Yeah. Hang out so you can visit with folks. Okay. Krabby's on Thursday, 12 o'clock, top producer lunch. Please let us know if you can make it or can't. And these are our top producers for last month. We had to postpone because of the snow last Friday. So we'll hit it on Thursday. If you can't make it, then the next producer up will get to go or get invited. So that's 12 o'clock on Thursday. Don't forget to RSVP for the awards banquet. That's on the 31st at the Elks Lodge. Cocktails, dinner, and awards. What did I miss?
It's a next summer reception.
Yeah.
It's just for the China's. Yeah, it doesn't affect the Asians.
I am going on vacation.
Oh,
That's right.
finally.
Finally.
Yeah.
Uh-huh. My family is going to go to Puerto Vallarta
Oh.
at an all-inclusive resort, and I would appreciate it if you would leave me be. If you cannot, I understand. I will answer your questions and get back to whatever it was I was doing. But I will be gone from the 20th to the 25th, and Indiana's number will be blocked after this week. So not just punished during the vacation, but up until then as well. So 20th to 25th, and
Oh, spring break.
this spring break, that's right. So there you go. That's what's happening. No meeting next week. And that's all I've got to say about that. Anybody have anything to add, ladies? Office ladies? No?
Just RSVP to the event, please. I have to have a final head count by 5 p.m. on Thursday, please.
Then Wednesday's our last day because I'm done with the
Wednesday's
panic.
our last day to RSVP.
Yeah,
I know most of y'all have.
yep.
So y'all in computer land. please.
Wednesday's the last day. This Wednesday's the last day to RSVP.
Yeah.
So you've been told, I don't know how many times. So that's long enough. Wednesday's the last day to RSVP. If you say, I didn't know, we'll say,
Yay.
Should
sorry,
have been at the meeting.
should have been at the meeting, should have looked at the
Or check
message
your email,
board or
check
check your
Facebook.
email or text messages.
Text.
Yeah. So if you have not RSVP'd, please do so.
Thank
Felicia, anything else? Tana, Bentonville, anything else there?
Nope, I think we're good.
All right, you guys have a great week. I'll see you in 2 weeks. That's it. Bye, guys.
Bye. Bye.